Hello, 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 my friends. I am here once again with my amazing bestie, Amber Coleman from Guild Mortgage.
Hello,
Amber,
nice to see you.
good to see you too. We are both in different places, which we do not like. I know we love being next to each other. I know we love
We
sharing the energy
do.
of the world, but when there's a message to be shared, we do not care. We're going to show up where we need to show up. Am I right?
You're absolutely right. We're here for you.
So today we're
Maybe
going to talk
kind of rub shoulders. Oh, this
I know,
side,
like
right?
I always do it on the wrong side. This side, this side. Boop, 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 boop. This side. Let's do this and get right. Anyway, today's exciting because we're going to be talking about how to be smart with your money when it comes to the real estate market, especially right now. Being that it's a buyer's market, and we have really, God dang, have we seen a shift? I mean, I just want to put it out there. Have we freaking seen a shift or what when it comes to the market in the last just 3 months, 4 months?
Like on a dime.
Woo, man. And that doesn't ever make anybody feel good. Like, I know that makes certain people say, well, then why would I invest? It can always change. But the biggest message of today, and we're going to repeat it multiple times, is that real estate is a long-term investment. And we want to make sure that everybody keeps that in mind, because I think the rental arbitrage and buyer arbitrage and flipping houses and stuff really became kind of the message of the day for so long. And that's all fantastic and wonderful when that's an appropriate time frame, but that is not now. Now is not the time for any of that. So we're going to talk a lot about that today, but really we just want to give you guys advice on how to be smart with your money when it comes to real estate. Amber's dogs are chiming in too. Hey.
Oh, can you hear them?
What's his name?
They're in the back, but yeah, you might hear them bark occasionally.
What are your dogs' names, Amber?
Reggie and Sophie.
Oh,
my cute little rescues.
I think I have rescues too. I feel like my dog, last time we did a live where our dogs started barking to each other, like through the live.
Oh, yeah.
Like, oh my God. So Baxter will probably be over here at any moment in time. He's always in the middle of my filming. But before I get started, before we dive into this agenda, I want to just remind everybody who's watching, or even if you're watching live or if you're watching on a repeat, feel free to comment in our comment box or any of the, below the post that you're looking at with your questions. This is for you. This live stream is for you. We want to bring you information and be able to answer questions back and forth in real time. If you're watching this on replay, no stress. Keep watching, watch to the end. We promise it'll be worth it. But we also try to respond to all of our comments as well on the video. So even if you don't catch us live, we're going to try to answer your questions or figure out a way to set up a conversation with you so that we can chat. If you are watching, I'm seeing some people live already giving me that thumbs up. No matter what platform you're watching on, whether it be Amber's channel on YouTube, our 2 channels on YouTube, or on LinkedIn or Facebook, we would love it for you to give us the thumbs up and comment just, hey guys, how you doing? Because that helps our algorithm and helps our channels grow. And we really, really would appreciate that. And freaking, while you're at it, you better subscribe to our YouTube channels because we're busting our ass over here making good content for you.
Yes, we are.
So Amber, you and I love, one thing I love so much about our energy and our focus and our goal in our businesses and how we've aligned our businesses is that we are focused very strictly on bringing a message of hope at all times. I have seen more clickbait BS online than I have ever seen.
It's getting ridiculous.
It's pretty gnarly. It's gross, right? And I know you and I share videos back and forth throughout the day of stuff that we either want to do a reaction video to or want to combat. But at the end of the day, I know that you and I are just always focused on bringing a message of hope. Why do you think that we are focused on doing that? I would love to hear your take because I know you've been through the ringer and so have I.
Well, I mean, because I think both of us, I should say, we have a passion for what we do. Like, I know me, like home ownership has given me so much. It's like my freedom. It's my ability to do what I want to do. And I don't want to be told what to do. I don't want to be told what to do in any way, shape, or form. So my passion is deep for being a homeowner and to getting out of renting from somebody because it's never any fun. I don't know anybody that says it's very fun to rent. So those are really your options.
Yeah, absolutely. Absolutely. And I think the other reason that we bring hope to the forefront at all times, we're going to be honest. If it's a bad time to buy, we're going to tell you don't buy. We did that a year ago. We did that 6 months ago to people, certain people. If it's certainly not the time, we're going to tell you, but we're always trying to bring a message of hope because we know that the dream for most people, the American dream is to buy a home and own it. And we know that, feeling like you're not, to your point, under someone's thumb or answering to someone else or being told what to do is everyone's dream. Freedom is the dream for everyone at the end of the day. And home ownership is what's going to get you there. Is right now the best time to buy for everybody? No. And we'll definitely be honest about that. But we definitely have put together some ideas and some points to talk about today on how you can be smart with your money if that's something you're looking to do, and some things that are available to you. And just, I don't know, I think we have a good discussion outlined. Once again, I want to encourage everybody. We've got a bunch of people logging on live. I'm just kind of basically saying, hey, how you doing? Thanks for joining us. While you're watching us live, please make sure you like so that we get, thumbs up from across all of our platforms. Comment hey, just so we say hey. If you have a question, this is for you. Our time is always for you. So drop your question in the comment box. We'll definitely get your questions here momentarily after we go through some of our comments that we want, or some of our conversation pieces we want to talk about today. Are you ready to go, Amber?
Let's do it.
Happy Friday, by the way. Holy crap.
Yes, it's a beautiful day.
A bottle of liquor or something and get this party started. It's 5 o'clock somewhere, right? Definitely not in Vegas, but I can make it 5 o'clock pretty fast. So be smart with your money in Las Vegas real estate. So first, let's just set the stage. Everybody, again, whether you're watching on any platform whatsoever, say hi, let us know. Make sure you like us. We love it. We appreciate it. We need it. Subscribe if you can. Follow our pages. We love you. Let's just talk really quick about the fact that we are doing a free webinar on October 15th. It's on the bottom of the screen. If you're not seeing it, you better freaking figure out how to see it. It's in the comment below. Register for your free access to a free webinar. We're spending our Saturday with you guys in like 2 weeks.
And really honestly, every time we've done it, it's turned out beautiful. We love meeting you guys. We love talking to you.
Absolutely.
We totally enjoy doing it. So let's hang out.
So October 15th, register. It's in the description below or in the comment below of this exact video that you're watching. Please register. We would love to see you there. Space is limited, so we're getting a little tight, but definitely get in there. We want to make sure it's a nice full community, but small enough to where we can spend some one-on-one time with you guys. Mm-hmm. So let's dive in. So our goal today was we were going to start a little bit with a market update. So really quickly, if you haven't heard, it's a buyer's market. Yay, congratulations. If you're a buyer, no matter what the interest rates are, don't let that dissuade you from actually looking at buying a home. Reason being is a lot of the sellers and a lot of the builders are helping you buy those rates down. They're helping cover closing costs. They're helping do a few things that are going to manipulate the scenario to where it's actually way in your favor. So if you're thinking about buying, I know it seems like the world says don't do it. Now, I'm sorry, but now between now and like March is like the time to freaking buy, in my opinion. It's also a slower season. So, we're walking into the typical slow season of when people don't want to move during the holidays and things like that. And what's our favorite saying, Amber? What do we like to pull from Mr. Warren Buffett?
Be greedy when others are fearful. Be fearful when others are greedy, right? That's love Warren Buffett for that. But honestly, the slower time means that sellers are scared, right? Fearful. You can work on it. You can get what you want.
So are builders. So while they're scared, let's get greedy and let's get greedy for you. So it may not be your time, but the best thing you can do is contact us and let us tell you whether or not it's your time before you make that decision for yourself. So let me give you a rundown of the numbers. I don't know if you guys care about these numbers, but I'm going to give them. Again, please like, subscribe, and comment below so we get the algorithm working in our favor. So the housing snapshot for last month, which is September, it's the most recent data we have. We only can go one month back as far as, most recent. Our median price is still up year over year. Our median price is $450. And our median price for new listings is still a little higher. It's $474. We've got quite a few new listings on the home. As of this moment, in literally this second right now, we have over 10,000 homes, almost 11,000 homes listed for sale. That's all townhomes, condos, and regular homes. That does not include new homes. We have, with all that being said, that's for single family. Sorry, for condos, it's $270 is our median price, and $285 for new listings hitting the market is our median price as of now, which is again still up year over year. Just so you guys know, we're up 10% in single family, and we're up 17% in condos and townhomes. So
honestly, that's good news for buyers. That's really good news for buyers.
It's great news. Have we seen a slowdown? Hell yeah. Why? Because interest rates are up. And the news is out. And what else is happening, Amber, that's making people think that they shouldn't buy?
But we went through the biggest boom that we could ever go through in housing for the last 2.5 years. Yep. So of course we could never continue that type of market.
No, listen, what goes up must come down, right? At some point in time, right? So for us, we see things are slowing down. A lot of people crash is coming. The crash is coming. And we're going to talk about that in a few minutes. Crash is not coming. We're definitely seeing some indicators of slowing and indicators of, wow, this is a great time to buy because you can really take advantage and gouge the
correction.
Yeah, it's a correction, not a crash, right? So those are the numbers, right? So we're still up year over year. month over month, we're not up, and I don't want to be up month over month. I don't even want to be up 6 months over 6 months. Honestly, for me, the last year has been the most treacherous, hard experience ever as a buyer's agent, trying to help buyers understand that you can't fall in love with a house before you put an offer. You can't even get excited about the price point they're listing it at, because you may not be able to even get it for close to that. It might be 50,000 higher by the time outbidding happens, right? So we're just in a place right now to where we're excited to see the slowdown. We're excited to see a deep breath happen. And we're excited to share with you that if you are ready to be greedy while others are fearful, we're ready to help you get into a house for a deal. You want a deal? Everybody wants a deal. Now's the time for a deal. So today we're talking really about, what the hell's going on with the market, but also how to be smart with your money in this current market. How's things going in lending, Amber?
Well, okay. So in lending, you're looking at rates that are definitely higher, right? We're going through a roller coaster ride day by day. Like one day they're talking about recession, and so we get a little bit of a break. But most of the time, what's on the market, what's on the news right now has to do with inflation, right? Every time something is released, like if it has to do with gas prices, it's usually bad news. That's inflationary. So then we're seeing the rates go like this. This is how I look at it. Okay. So the closer you get to 8%, I know this is going to sound bad, but just hear me out. Like listen to the whole thing. Okay. So right now we're heading this way, right? The closer we get to 8%, the quicker the feds have to stop this, right? Because our market's going to stagnate so much that then they're going to have to lower the rates to be able to re-stimulate. So when people say crash, I'm like, we're too manipulated. We're not in control of this. Nobody is. The feds make the moves. They do everything. So the government's more in control of this. So as we go like this, the quicker then they're going to have to move it and move that down, which is then going to get people, all the 3 million people that are sitting on the sideline right now will then jump off the sideline. They're going to get back into buying houses, and then the prices are going to move up again.
And then the buyer's market that we're talking about, all these juicy
is not there.
Deals goes away immediately, dries up immediately, right?
Yeah, it's not there. That's why we're saying right now is the time to buy, because we're here because the feds have moved it up. But you can watch the economical news to be able to know that they're going to have to drop that at some point. They can only let things stagnate for so long. So
absolutely.
So right now is the time to buy before they start dropping things, because when they start dropping things, and the crazy thing is that when it hits, like, right now you've even teetered with 7 in some like different types of loan programs. So as it gets closer to 8, the crazy thing is before people were saying, well, when it gets back down to the 2s, once it gets to 8, people are going to be screaming, okay, it's down to 5 again. Okay, now I need to start running. That's the crazy thing, is they're moving it up so high just to change the perception. And then when they bring it back down to 5, everybody's going to be happy and people are going to come off the sideline. So I think it's a matter of kind of seeing what's happening and then just rolling with it and taking advantage as you can.
Yeah. And so I know that a lot of people think we're nuts because we're out here saying, now's the time to buy, now's the time to buy. But we are in this business every single day. Our hands, our feet, our minds, our mouths, everything is in it. We taste what's going on out there. We know the deals. We know the recipes that are being cooked. And we're telling you, it's never been more decadent of a time. It's never been more incredible when it comes to negotiation. The ability for us to, I almost feel like we almost have a little bit of an easier job right now as agents. Definitely not if we're selling homes, but if we're selling homes to buyers,
you're buying.
Because negotiation is like a no-brainer. It's easy. It's like, hey, we want this. Okay, great. We want that. Okay, we want this. Give it to us. We're not buying. Boom, we're going to buy, right? So it's just been a really interesting scenario to see shift. And I'm super grateful for this opportunity, because there were so many buyers last year that were put to the sidelines because they couldn't afford to come out of pocket $50,000 above, whatever. They couldn't afford to just lay money on the line just to get the house they wanted. And they got pushed out. And I'm just so excited that now we are back to seeing those people have an opportunity. The first-time home buyers, the people, the VA buyers, the people who just, typically just kind of are coming in a little bit, not as strong as maybe somebody who has $1 million in the bank that can just reach into the bank and pull money out. And it's just exciting to see that we have buyers that have a chance again.
It's a beautiful thing. Honestly, I'm loving it. I'm loving it. When I see the contracts coming in and buyers, what they're getting, it excites me. It excites me to help them learn how to spend their money that they're getting from the seller to work that system.
Once again, I just want to pause for a second and remind you guys, if you can't see it on the screen, we do have a free webinar, home buyer webinar, coming up on the 15th. The link is in the bio or down below in the description. So, find that, click it, register, come and join us on October 15th. We would love to hang out with you and have a good time. The other thing I want to say is please like this video while you're watching it. If you are watching it, we would appreciate it. And also comment just, hey, even if you just wave to us, it helps the algorithm and helps our channels grow. So let's move on to things that, a lot of people are saying, a lot of phone calls that we're getting are saying, oh, I'm seeing the same loans as before. I'm seeing a lot of the same stuff that was once here. And that's not, like things that are reminiscent of the crash, if you will. So
let's talk about that.
Bring those things up. Is that cool?
That's totally cool.
All right. You ready?
You
Sorry, I'm done you. Okay. So one of the things that I'm seeing is 0% down mortgages. Amber, talk to me about 0% down mortgages.
Well, here I can talk to you about the ones today and the ones back then, so that we can kind of relay the two, right? Every loan in before 2008 was 0 down loans, right? 100% financing. If you bought it as primary residence, if you bought it as second home, if you bought it as investment property, hey, if you didn't even have money that you didn't make money, you could have done a no ratio. If you were self-employed and you just wanted to put on there how much you made, that was fine too. You didn't have to prove anything and still come in with 0 down. So when you're seeing 0 down loans right now, they're not anything like that. You have to qualify for everything. Most of the 0 downs right now are based off of grant money. So you even have to make under a certain income to get it, because it's money that's given by the state. You have to fit within a certain debt ratio by proving that your W-2s and your pay stubs are what they are. So completely different ballgame.
Right.
And like your credit scores have to be at a certain level. Back before the crash of 2008, I would legit tell people that if you were breathing, you can get a loan. Like that, there was no lie in that. That was complete truth. I'm not anybody to tell a lie or try to sell something that can't be done.
That's not the case to save your life. I love you, but you couldn't lie to save your life. I love that.
That's not the case anymore. You have to be able to qualify for these loans. And there was so many regulations that were put in by the federal government after that date. So those loans they would love to come out. They're on the hard money side. They can't open them right now because they can't get rid of the laws that were put into place. So completely different ballgame. Completely different.
Love it. How about the ARM loans? I know I personally was a part of that system and unfortunately had to file a foreclosure because of not being smart enough to ask the questions, being very young. I think I was 22 at the time, maybe 23, buying a home for the first time and got sucked into an ARM loan back then. What's the difference between then and now?
Okay, so the difference between then and now, back then, everything was based off of an ARM loan. Everything was. There was very few loans that I actually did that weren't ARM loans because the subprime market ruled the world back then, right? The subprime market required less documentation, so people were willing to pay a higher interest rate and get an ARM loan to do it. Most of those ARM loans back in the day were 2-year and 3-year ARMs.
Yep,
right?
Mine was a 3-year. Yep.
And you didn't have to qualify at the higher rate that your ARM would adjust for. So you were taking a 2-year, 3-year ARM without being able to make the money to make it to be able to make the payment should it adjust later. The ARMs right now, I haven't seen any 2-year ARMs. The 3-year ARMs are very minimal. In fact, they're not any better than the 5-year. So it's mostly 5 years, 7-year, and 10-year ARMs. Those ARMs honestly never went away. They've always been here.
They just became less popular, right?
They became less popular, and honestly, their rates weren't much better than the fixed rate, right? So they still have those loan programs out there. But they're like, if you're looking at 5, 7, 10, then you kind of have to look at your game plan in your life, understand if you're going to be living in that house that time frame, and then you can decide whether you want to do it. But completely different ball game. 2 to 3 years, you don't even know what you're going to. 2 years goes by just like that, right? You don't know what you're going to do, and that's what happened. 2 years came by, and they're like, "Crap, my arm's adjusting, and now I can't get out of it." I was in the same boat. I had two houses that I lost at that time. It was a horrible time for me.
Got it. So again, not the same. Similar, not the same. They look the same. They're like cousins or like sisters, they're like distant relatives, not sisters, right? People always, I don't know if you know the rule that if you ever get your eyebrows done, they say they're supposed to look like sisters or cousins, not like distant relatives. Because you know how some people like shape the eyebrows. I always think about that when it comes to the then versus now loans. I know I always come up with the weirdest shit. I know. But think about it. Like, loans are like distant cousins, not sisters, right? They don't look alike. They have the same name. They're like Patty Duke. They look alike. They sound alike. Sometimes they even walk alike, but they're not. What a crazy pair. But they're not cousins. They're like distant cousins that don't have any kind of relation, and they could probably get married and nobody would care, right? It doesn't matter. Yeah. So do not think that because you're seeing 0 down mortgages, ARM loans, that it's all of a sudden the crash time. We're also seeing house prices drop, right? And we're not seeing values drop just yet. A little bit, but not really crazy. We're just seeing a correction. So I want to just, again, if you watch our live streams, I harp on this all the time. Just because you see on Zillow and Redfin that people are dropping prices does not mean values are going down. It means greedy sellers or uneducated sellers are bringing their prices down to normality so that they can actually get it sold. That they once listed thinking they were going to get what cousin John got down the street or neighbor Ned got. When they sold at the right time, they waited 1 month too long, listed their houses. Now they're having to drop the price to come down to reality of what the actual value of the home is. So keep in mind, value versus price, two very different things. And the other thing that people are seeing is that more inventory is hitting the market every single day. And that makes them go, see, more houses. People are trying to sell their houses. Nobody wants to invest in real estate. There's just some of the stuff I've heard people say just makes me crazy, to be honest with you, because I just want to shake people and say, God, please stop being a lemming. Please don't listen to the media. Please make decisions and be smart and make educated guesses yourself at the end of the day, and listen to the people that are hands in the mud every single day working this industry, which is us. So for tuning in. Okay. I just want to stop real quick to remind you guys, this is for you. So please comment below if you have any questions. Stay tuned. We're going to do your questions at the end. We've got a few more points that we're going to hit on, and then I promise we'll get to you. Again, we also have a webinar. Link is in the description below or the bio, whatever you're looking at. You're all watching us on different platforms. And again, like this video if you can. It helps us a ton. Smash that like button, smash that subscribe button. We love you. Okay. I'm like a saleswoman on a mission today. I got to get it.
I love it. Look at you. Not missing a beat.
So, what we're seeing right now is, it does look and seem to be reminiscent of the crash before, but we promise you what we see from our crystal ball is that this is a correction, not a crash. And we're grateful for it. And you should be grateful too. We want to tell you, how do we use this unique time in history to your advantage, right? We really think this is like a very unique sliver of time that not many people are going to be able to really see clearly unless they're watching our videos and they're smart enough to listen. So Amber, we know it's a buyer's market. What are you seeing sellers give when you're doing loans and things like that? What are some of the things that you're seeing sellers come to the table with?
I'm seeing them come to the table with up to 6% closing costs, which means you can buy down your interest rate. Like I've done a lot of different things depending on the house, right? Buying down the interest rate, paying HOAs in advance, doing all of the above, 3-2-1 buy downs, 2-1 buy downs. The sellers there's options of what they can do if they're going to give you that money. These are options that you don't see other than in these kind of markets. So it is kind of a pretty time where you can play with things like this to be able to get into your house that you want. Right. And like for people that couldn't get a house before because they didn't have that over the appraised value, like you can come in with less. And if you don't like the payment, then let's have the seller take care of that by giving more money because they're doing it. I'm getting contracts all the time with it.
So what else are you seeing? Like, are you seeing a lot of sellers do major repairs, or are they being super, like I'm seeing a lot of sellers be super lenient with closing timelines and like all kinds of stuff like that.
Oh yeah. I mean, pretty much what the buyer's asking for because they don't want to lose the buyer, right?
I had to make an edit to our banner down below. If you didn't watch, I'm just made an edit. Look at that. Boom. Link in description. Here we go. I said, nice. Buyer. We're also seeing a lot of
amazing.
I'm super techie. Okay. We're also seeing a lot of new home builders do the same thing. But in addition to that, in addition to the fact that it's a new home, brand new freaking home, right? On the new builds that are like inventory that they have to get off the books. It's quick move in, someone fell out, whatever that is. They're even giving like design upgrades up to $25,000 to $30,000. Like, hey, you love those those green cabinets. You really want that really expensive floor. You want that super high-end granite. We got you. We're going to give you up to $25,000 credit, apply it to the house, and we're going to pay your closing costs. Oh, and we're going to buy your rate down. Oh. And. So I think the message of this is how to use this time, unique sliver in history to your advantage is work with agents like us and lenders like Amber who know how to manipulate the system in your favor. It's not It's not illegal what we're doing. We're just being good negotiators on your behalf, and we're being creative with how to get sellers to give you more, how to get builders to give you more, and how to make this transition from where you are to where you want to be, which is right here in Las Vegas, that much easier, right?
Yeah, yeah. I mean, it's true. You have to really walk in with somebody. I had a client the other day who walked into he actually canceled 2 other houses, right? Then walked into a builder's office, had the agent, the builder is trying to say, well, you didn't, you can't qualify through our lender because he needed a different type of loan program. So we're not giving closing costs. So then I was able to make the call and say, there's like a lot of other houses that compare to yours right now. So,
Yep.
we can kind of go there because I already know your game that you're doing.
We already know what you gave our other client 2 days ago. So we know you're willing to give this.
We can negotiate closing costs because just because you're not double ending making money on both sides of the transaction, you can still give this client closing costs, and they gave the client closing costs. So it's very important that you have people representing you, like not their pocketbooks, but you. And Lacey, your team is like far above anything that I've seen because you guys walk in, like some of the deals that I've seen you guys write, I'm like, holy crap, you guys really worked it over for these clients.
Yeah,
so
I did a live stream with Trace Askew, who's our director of operations at the team. And, we did this live stream about here's the deals of this week that we're seeing at these new home builders. Cause we just felt compelled to like come online and go, you guys, you're not going to believe what these freaking builders are giving away. And the theme of the live stream was, let me help you squeeze the shit out of the limit of this house that you're trying to buy. Because we put them in a vice and we screw it down, and then we screw it down more and we screw it down more because we don't care if someone's eyeball pops out. I'm going to be very frank. This is mob town, baby. Las Vegas. We do it mob style, and we're about to squeeze the shit out of this deal to make sure you get what you need. So
that's what I love about you. Go girl.
Thank you for the compliment. Let's talk about some examples of, of being smart with your money. I think the biggest message, and I want to say it again, because we talked about it earlier, and I want to mention it again, is you need to think about real estate, especially right now, as a long-term investment. I figure I should put that across the screen. Real estate right now is a long-term investment, period. The days of flipping houses and let me buy it in 2 months, the days of doing all of that are really on pause right now with interest rates being as high as they are and the market being as slow as it is. So it's not the time for you to try to get into, let me flip a house, let me do a thing. The time right now is for you to think of your primary needs or investing so that you can get a rental property going or a long-term Airbnb, whatever that is. We can help you think through it so that you're investing your money in something that will always be needed. People always need a place to live. I don't care what the market does. People always need a place to live. If you can be smart about it, you can really turn yourself into an investment firm, if you will, that owns multiple properties that can rent while rent is at the highest it's ever been and make the most money for your buck. So for me, that's my message to you. But for me, loan trading days are over. It's a buyer's market. That's the bottom line. But let's talk about example number one. If I was a first-time home buyer, Amber, how could I be smart with my money? What would you tell me?
Well, okay. So if you're a first-time home buyer, the first thing I would tell you is let's get yourself ready, right? So I'm going to teach you how to get yourself ready. What's not taught in the world or in school, and it should be, right, is how to really take care of our finances and ourselves. So the first thing I would say to do is pay yourself first, right?
I love
when you get a paycheck, you think, okay, I'm going to pay all the bills. I'm going to pay all the bills. And then by the time you're done, nothing's left, right?
Right.
Always pay yourself 10%. Like that's my rule, 10%. And remember, I know I've shared things about my life in the past. I've lost everything before, just like we talked about.
Right. Me too.
And after that, I promised never to make those mistakes again and to change my life around. And that was the first move I made, is when I got paid, I needed to think about, it's just like you love yourself before you can love anybody. You can't love everybody else if you don't love yourself, right?
You pay yourself. I'm definitely lost in that game. So I'm back to loving myself first. Yeah.
Love yourself, girl. Yeah. But you pay yourself before you pay anybody else. And you make your bills roll around that. So be smart with how you're taking out your bills. Give yourself at least 10%, but start with 10 because it's sometimes hard to move money into a savings account if you don't have the habit. Once you have the habit, then it's a habit.
Of moving it into an account that you don't see. Like put it into an account
Yeah.
that you don't have on your phone, that you're not looking at all the time, that's not next to your checking account, right below it as a savings, because it's always something you feel like you can pull from. If it's in an account that you don't think about often, then you'll be able to build up faster. That's definitely a piece of advice I would give. Before we even go to that though, how do you know if you're ready, Amber? What's the best way to find out if you're ready to buy a house or not?
I think you click the link below and you give us a call, right? Because honestly, what we're going to do is we're going to give you a full game plan. We're going to, like you'll talk to Lacey's team. They'll kind of go over what's out there and like all the plans on that. And then you'll talk to me and then we're going to go over like your credit. So if you have problems with your credit, if you've never looked at it before, whatever the case may be, I'm going to say, here's ABC. Here's what you need to do to get ready. There's never a no. There's a how. Here's how you do it. There's not, no, you can't do this. Remember, time heals all wounds. So when you've had a past, you've had life happen. So have we, right? So then now it's time to just move forward. And remember that time is on your side because it heals all wounds, even with your credit. Like everything goes up. You just need to be able to move forward and balance that out.
So if you're a first-time home buyer, we know it's hard to save for down payment. We know rent's getting higher each and every year. We know gas is expensive. We get it. Trust me, I get it. The first step is please contact our team. Let us help you put a game plan together. Part of that game plan is going to be pay yourself. And she's going to tell you start paying yourself 10% each month. And we'll go through that. The next component of it, which you just touched on a little bit, Amber, was getting your credit ready, right? Focusing on your credit game plan. Talk to me about how many people you put on a credit game plan each and every week. Because I know there's a lot of stigma around it. And a lot of people are really worried about being judged with having bad credit or making bad financial decisions in the past.
I mean, really, do we look like the judgy people? We get on here and we share all of our stuff that we've had problems. We've had this, we've had foreclosures.
Way too much about my life. Let me just put it out there. Way too much about my life.
We're not judgy people. So don't worry about what you have. Know that we've had it too. And we're here to help you get out of it, just like we got ourselves out of it. I mean, at some point we had to help ourselves to be able to even have the passion that we have for home ownership. So now it's almost like paying it forward to help you. Right. So if you're worried about your credit, you don't know where it is, you don't even know how to do things. And honestly, it's part of society right now. So let's just teach you.
Yeah, absolutely. And then the other component, if you're not ready to buy yet, is start to figure out how to live beneath your means. And in a society that we're in, where social media is all about bling bling and people making it rain and it's keeping up with the Joneses, that's a very difficult mindset to get into. But I will tell you what, Amber's probably the best person to talk to when it comes to having somebody really inspire you to put a focused effort toward whatever your goals for life are going to be, which hopefully includes home ownership, right? So try to live within your means, but all of that comes with a game plan, and that starts with a phone call to us. Click the link in the description. We're ready to talk to you. If you are ready, as a first-time home buyer, if you are ready, how you can be smart with your money is, I know there's a shit ton of free grant programs, free money available. Is that right?
It is right. And a lot of people aren't utilizing it right now.
Definitely not. Absolutely not, actually. What about VA benefits? I know there's a lot of people that have VA benefits that are even still with a VA loan, which is like the best freaking loan on the planet, still are afraid to use it because they don't think they're ready.
Yeah, you know what? I've talked to so many veterans that, number one, don't realize what you have in a VA loan. There's no other loan that doesn't require you to come in with a down payment. Right now, you can get the seller to pay the closing costs, so you can legit get in your house without putting a dime down. I know. And there's no mortgage insurance on it. They have the better rates. Plus, if you have credit issues, VA actually works with you on stuff. Like they're not as strict as other loan programs are. So especially if your credit issues relate to your service in the military, then you can go for exceptions and stuff like that. So VA loans are amazing. If you're a veteran or if you've been in the military and you have eligibility, let's utilize it. Like there's no better program than that.
I get so frustrated when I meet people who are eligible for a VA loan, who are just afraid of being judged, afraid of their credit, afraid of, well, we get moved from every year to year to year. Like there's just a crazy level of fear in the world that I just want to dispel immediately and try to squash it and help you guys get excited.
Well, can I share an experience about a VA loan too? Okay. So I have these veterans, they're older now, but when they were in their younger years, they were military people. So they moved from house to house to house, right? So whether they're inspired or somebody really smart told them what other people weren't doing, so they should do it, they bought a house where they lived. And then when they were transferred, they bought another house. And then when they were transferred, they bought another house. And they kept doing that. And so right now they're in retirement years. They never sold these houses. They just continued to pay them through rents that were coming in. A lot of the houses were paid off, or you used it to propel to another house. But she has so many houses, it takes me like 2 days to put her paperwork together, because there's so many houses that paid for free and clear, and then some have loans on it, because she's just continued. Multi-millionaires, because it doesn't matter how much you make, it's how you spend it. And they didn't look to keep up with the Joneses. They didn't look for any of that. They were just looking to build wealth, and they did it. I mean, they're retired right now, so they went through the 80s, the 90s, the times when houses did have problems, right? And they just wrote it. And right now they're in a place where they're multimillionaires. But honestly, it doesn't matter what market you walk into, because a lot of those houses are paid for free and clear. Yep. That was an experience of a veteran, because they move all the time. But I mean, anybody can really do that. You just have to be not able to look at the Jones, like keep up with the Joneses, and just. And you also have
to have someone like you on your side to like keep rooting for you, keep helping you restructure your mindset, and also restructure your plans.
Yeah.
The other thing, if you're a first-time home buyer and you are ready to buy, looking at rural areas 30 minutes outside of the city for more free money options that can be stacked onto other free money options is a really good way to be smart with your money. Mm-hmm. And also the first-time home buyer programs are always really a great way to be smart with your money, because there's some of them with zero down, some of them with a lower down payment. There's a lot of really cool programs out there now, and even more coming and hitting every day. And in January, we're going to see even more free money, more than you've probably ever seen, hit the market to help people stimulate, the buyer incentive. So to be smart with your money as a first-time home buyer, those are some ideas, but these are not all the ideas. This is not an exhaustive list. Amber can literally walk you through your specific situation and tell you, here's exactly what you need to do. This is different from John Smith, who commented you watch. So the first and always last step is call us. Click the link in the description. Let us have a quick intro call with you. Let us determine where you are, and we'll connect you with either Amber or our team and get you rocking and rolling. This is a heavenly slice of goodness right now in the buyer's market that we're in. Oh my God, it gives you the ability to get juiciest, crunchiest piece of watermelon or cake or whatever you want to call it, to literally feel like you got the deal of a century. And I know it doesn't feel like it, because interest rates are this or that, but I promise you, the way we can negotiate on your behalf, you'll be happy at the end of the day. So start with me one more time. Once again, please make sure you click on the link in the description. We have a webinar coming up on the 15th. We also would love it if you could give us a like or thumbs up, even if you're just watching from wherever, and also comment below to say hi, because it helps the algorithm. All right, let's talk about example number 2. What if I'm selling my house in California, Connecticut, Florida, another market? How can I be smart with my money if I was originally going to pay cash for a house coming to Vegas because I cashed out on my house in whatever other city or state? How can I be smart with my money? Do you have any examples on people that
have done that? I do. Funny you should ask, huh?
You would think we planned this. I don't know.
I know, right? Okay, so there was a client that had sold his property in California. He had a lot of money coming in, was planning on coming to Vegas and paying cash for a primary residence, right? So, but he was moving from a job and then now going into retirement. So I did talk to him. And when I talked to him, I said, hey, let's look at maybe a different way of doing this, because there's a better way that you can invest your money instead of just putting it all in one place. I said, you can put a chunk down on your primary residence. And we ran the numbers, put a chunk down on his primary residence, so it kept his payment at a reasonable level, right? And then he bought 2 rental properties on top of that, put a chunk down on those 2 properties, and the rents that came from that subsidized the primary house that he bought. So he now has 3 investments instead of just the one, and then he's receiving money off of those investments to be able to help here. And I mean, he's building a business for himself.
What a glorious day for those folks.
I know, smart.
So a lot of people assume, I'm just going to sell my house here, pay my house off right when I get to Vegas. Then I don't have a house payment. Everything's great and wonderful. But what you helped that client do was structure and diversify their investment to where they're basically getting the same experience they were going to get if they paid cash, but they're doing it. And then they're also earning equity in two other homes on top of the one that they're living in, all of it being covered and paid for. How freaking crazy is that?
It's awesome.
Amazing.
I love it. I love it when people can propel themselves into, I mean, when I closed, I think the 3rd, he was like, I'm like a real estate mogul. What's the right word for it? Did I say that right? A real
Mogul's
estate
probably a good. Yeah,
mogul?
I don't know what mogul. I
I
don't know
just
what the
thought it
best
was funny, like a mobster or something like that.
Yeah, for sure. I
Yeah, it
love
was
that.
kind of
And I
cute.
love that, and had they not listened to you, they would never have thought to do that. And they might have wasted that money and been, not had a future. Now they have a future to rely on, which is super cool. So example 2, if you have a house to sell somewhere else and you think you're going to just come in and pay cash for the house here and call it a day, not advisable at all times. We would love to look at you and see if there's a way to structure or get you some condos or get you some townhomes or get you something that can feed into and pay for not only that investment, but the one that you're actually living in and enjoying, so that you have a little bit of money in the bank once you, decide to finally retire. It's crazy. I'm so excited that we did that with that client and that they called you. So thanks for being amazing. Okay. Example number 3. Marry the house, date the rate. So how can you be smart with your money in Las Vegas real estate? You can go into it with the mindset that it's a long-term investment. Long-term, meaning whether you live there or not, buying a house is something that you should be thinking about as a long-term investment, and that you can marry that house, fall in love with the house that you want, because now is the time, the juicy, crunchy, amazing, incredible time to get what you need and want out of the home that you're negotiating for. And yeah, the rate might be not what you're excited about, or maybe you can get them to buy the rate down a little bit, but it's not really where you want it to be because it's not free money like in COVID times, which was like freaking candy of
everything
free money.
was free. That's why it's not free now.
Free cavities from 2020, honestly. With all that being said, we want you to marry that house, get in love with that house, get excited, negotiate as hard as you can with us to get what you want, but date the rate. So don't be scared off by the rate. Talk to me more about that, Amber.
Okay, so here's what the rates are doing. So just kind of, we have some understanding, like, so that we can see what it's going to do in the future. Well, I think I kind of explained this a little bit earlier, right? The rates are going like this. The minute it hits stagnation in the market, then you're going to see the feds have to pull back, just like Europe did. I mean, Europe just did this. They're going to have to pull back, and then the rates are going to go down, and everybody's going to come off and start buying again. That's why it's so juicy, crunchy, as Lacey would say right now, right? Because right now is that time when it's heading up. So don't be afraid of the rate. Like, date the rate, because you're not going to keep it forever, right? You're going to replace it with something that you can marry later on. But definitely get the house while we have this juicy, crunchy spot. So marry the house, wait for date the rate, get it right now while the rates are a little bit higher. And then when they start going back down, then we can refinance you later and get you into a lower payment.
The other thing too is, I want to say, because the rates are a little bit higher than they are, it does definitely prevent some of us from being able to get that big, bougie, amazing, perfect house that we've always wanted. So I want you to say, fall in love with whatever house you're going to negotiate and go for. But if it's not the big, the dream, the thing for you, no problem. Just don't be picky. Get into a home, negotiate as hard as you can for whatever home we get you into with us by your side, refinance it later, and then take what you earned in that home and put it into the dream home that you can get into when the market shifts or things are in a different place. It's actually a really fun game. And I know it doesn't feel like that as buyers, but it really can be a fun game to, land on, this is what we're doing for now, long-term investment. We're not going to let it go. We're going to either keep it or turn it into a rental. It's going to feed our family for XYZ number of years. Once you're in that mindset, long-term, now it's in the mindset of marry the house, date the rate. I'm going to marry this house, at least for now. It's going to be my first wife, right? This one's my first wife. Everybody's got a first wife, right? Or a first husband. Does everybody have a first husband? I guess so. Maybe not. But either way, I certainly did. So first one, right? Get in, make the best of it, do what you can, get what you can out of it. When it's time to move on, you move on. That's kind of a sad analogy. I should probably not go down the marriage route. But anyway, get what you need, move out of it, move on, and then take the good from that and take it on to the next one and get into what you want. So for us, it's marry the house, date the rate, refinance that thing later. Don't get hung up on the rates. Don't get hung up on, but if it was 2% rates, I would be able to get this house. That's not the game you're playing today. The game you're playing is, this is the game we're in. This is the rates we're at. If you are going to go into buying a house and have to ask for a rate reduction so you can get the house you need, then we need to go in from day one, knowing that's what we need to do. And you'll know that you'll be able to shop in the realm of what you can shop for, knowing that we're not going to accept an offer from anybody other than the people who are willing to play the game of buying your rate down to where it needs to be, right? So either way, you're going to be able to shop in the realm that you need to, because we're going to make the sellers help you there, or you're going to get over it. You're going to bring it down a notch, and you're going to start with the first wife or the first girlfriend or that serious girlfriend that you never really married, but you were super excited about. And then you move on to the next and you get into it. But refinancing later is the main message of that. We want to make sure you guys understand, with the way things are going right now, they're going to have to do something. This is not going to be like this forever. This is temporary. So
It can't be
that mindset for sure.
And the higher it goes, the faster it's going to end. So like half of me is like, come on,
hold on to your hair. Hold on to your hair, ladies and gentlemen. That's all I have to say. All right, let's pop over to the comments. Again, I want to thank everybody for tuning in live. We really appreciate you, especially on a Friday afternoon. Hello. Is it 5 o'clock where you are? And if so, what cocktail do you have in your hand? I would love to know. We're going to pop into the comments and see what everybody's saying. Please, if you're watching, again, we've got an amazing webinar coming up on the 15th. And I would love for you to subscribe, like, and comment. It helps us with everything we're trying to do. Let's pop into these. Oscar Love says, hey, girls, gives us a thumbs up.
Hey, Oscar.
Paul Carl Lucas says, why should I invest in rental residence if I have to run the risk of the government imposing an eviction moratorium? What are your thoughts on that? When's the last time you saw an eviction moratorium?
During COVID.
And when was it before that?
And that's the only time I've ever seen it happen is during COVID. So, I mean, it would be if they do have to put those as eviction moratoriums, I mean, there has to be something horrible that happens. Yep. Usually horrible things that happen are going to cause the rates to go down a lot. When rates go down a lot, the prices go like this. So it's not like any of those investors that had houses at that time. They did lose temporarily out of their pockets. Hopefully they had reserves and stuff like that, but they ended up in the long run gaining because they gained with the value of the properties.
And my comment to that would be, thank you, Paul, as always. You're like our finance guru that always comments, and I just wish we could put him on payroll or something. I love you, Paul. Thank you for always commenting. You know, I think you should always think about the things like we've never seen an eviction moratorium literally ever until the pandemic. So unless there's another pandemic coming, I don't know that there is. We can never guess on that or plan on that. Why would you, since we cannot foresee that future, why would you cut yourself out of investing in something or making money on something until we can foresee that, right? The end of the day, too, is during the eviction moratoriums, there was help for homeowners who were investment homeowners. There were the lenders were giving them forbearances. There was a lot of
that's true.
There was a lot of free money to assist those people who were homeowners that were investment homeowners. Didn't come as fast as the free money for people who were renters, but it definitely did come. So why should you invest in a rental residence? Because the rent has never been higher, because the city is not going to stop growing, because this is all temporary, because even though we could have said this in 2021 and probably still would say it if the pandemic never happened, when has there ever been an eviction moratorium? The likeliness of that happening again is probably lower than the likeliness of you making a solid investment and return on your investment with a rental residence. That's my take.
Great question, Paul.
AD Angel 702 says, hi, everybody. Hey, AD Angel.
Hey.
Angel. David says, is there any worry amongst realtors about lowered sales volume with the upcoming recession? And how do you think it will affect home prices? Great question, David. What are your thoughts, Amber?
Is there any, I mean, yeah, I'm sure there's worry with, some, but in the end, it's going to make like a better economy when this all works its way out, right? Like, so eventually we're going to be able to see everything kind of work its way out because it was so high for a while. It's hard to maintain that. Absolutely. So you almost have to go through this little bit of lull. Again, a good time to work on the sellers to be able to get what you can, but eventually it's going to work its way out to a more healthy market. So
absolutely. And for me as a realtor, I know that you work with tons of realtors, Amber, not just me and my team. So I wanted to ask you first, because I know you're hearing the buzz on the street, if you will. My team, there's always worry under everything we do because this is how we pay our bills. Lowered sales volume is probably a bigger concern than lower home prices, honestly. We would love to see a little bit of lower home prices or stabilized home prices, I guess is a better way to put it. We love seeing things stable. We love seeing it be a little bit more of an even experience for buyers and for sellers. We love the opportunity to actually give everyone a chance to buy a home, whereas a year ago was not possible. And, for me, yeah, I think the lowered sales volume is scary. But for me, I think it's scarier for agents who don't have a plan, who aren't solidly focused on this being their full-time job. And also for agents who were just in it to make a quick buck. And that's not been any of us ever, right? We are in it for the long haul. We love this industry. We love people. We love the city. And we want to make sure that those all three things marry together. But great question. Thank you so much, David. Awesome. Slim says, keep it up, ladies. Y'all are doing a great job. Thank you, Slim.
Thanks.
Leslie says, great content as always. Thank you. Thank you. Appreciate you, Leslie, as always. Samuel Jackson says, howdy, gals. Hey, hey. And Melissa,
hey, Sam.
Melissa says, hey. Let's see.
Okay.
Ray Wolf says, it's my Tuesday per se. Weekend, not till Monday for 3 days. Only one time actually owned a house where we only paid taxes and kept no mortgage. That's super smart, Ray. That's awesome. Chris says it's 5 o'clock in Minnesota because I was saying, I'm going to make this.
Oh, there you go, Chris. Time for your drink, Lacey.
Slim is asking, when will you have another in-person meeting again? I had a lot of fun meeting your team. Slim, thank you so much. I think that's Valentine, if I'm not mistaken, our friend Valentine.
I think so. Yeah. Yeah.
Good to see you. Thank you for always joining us live. So we do often do, we were doing monthly meetups. They got a little expensive, if I'm going to be very honest. And we were paying for drinks for everybody for like 3 hours. And it was like, okay, that bar tab was hefty. But we will be doing another event coming up. End of the year, we typically do a holiday event where we give away like free pies to our clients. And that's coming up right before Thanksgiving. And then starting in 2023, you can count on us doing quarterly events as a team with Amber, public events as well from time to time where we invite anybody, even if you're not a client, to come out and hang out. So thank you for mentioning that. We're glad you had fun. We really, really appreciate you. Lady Victoria says, hey.
Hey, girl.
Urban Backed says, I had a 7% rate back in 1996, but my house was only 142,000 in California. But see, 7% has been here before. Okay, this is not new, everybody.
Yeah. And the wages, you got to look at the wages too. You know, what they were
different too.
At that time and what they are right now too.
Our sweet and amazing client / friend, Samuel Jackson, said rates are all personal perspective, still historically low, yet double of a few months ago. So we have to like keep all that intact. So that's why we say marry the house, date the rate. Depending on where you're shopping, we'll marry it. We marry the idea, go all in, and we'll figure it out later for sure. Oh, Urban Back said now had 7% back in 96. House was 142 in California. Now his house is over 750,000. Talk about a good investment. Even at 7% rate, invested, bought the house anyway, now over 750. That's a retirement right there. That's
long-term investment, right? Long-term. You rode those waves. Because California has gone through a lot of waves.
That is not that many years ago. You know how I know? Because I graduated 2 years after that year. So that's not that many years ago, right, everyone?
That's not that many years ago.
One of my best friends from high school, one of my I guess we were like the three amigos, the three trios, the crazy crew. Dave Kessler says, hey, Dave, thanks for watching us.
Hey, Dave. Dave needs to come tell us some crazy stories about Lacey one day, huh?
No, he does not. He will tell them, and then I will probably lose my license. Growing up in Las Vegas. Let's see. So the Toroso X3 says, since the 2008 crash, real estate has quadrupled plus. Now is a launching pad for the next leg up. How many wish they would have purchased more then? It's all relevant. Amazing advice. Thank you so much, my friend.
Love it.
Really, really wish that. Don't you think we'd be watching the market? Let's see. Okay. Oh, look at this. Mark says we look radiant. I look radiant today. Good luck with my venture. Thank you, Mark.
Oh, nice.
Every time I put on lipstick, people are like, you look good today. I'm like, I have small lips and everybody thinks that like I don't have any, basically. I'm going to start wearing lipstick every single day. This is it. We're done. Amber, Chris M wants to know, do you have any personal rentals available in your fleet of rentals that you have been keeping? I know you have most of them rented out. Yeah.
Yeah, I don't have any available right now. I'll let you know if I do, though, if you're looking for
Chris,
something.
Send us a message. I'm pretty sure you're supposed to take me to the lightning in a bottle experience or something this weekend.
Oh, see, Lacey has a memory. She doesn't forget.
Waiting for the date. I think that's the same person. A D Angel 702 says, I've been thinking about making a career change for a while and getting into real estate. Is now a bad time to get licensed in Nevada? Whew, man, that's I want to swallow for a minute and reply. So here's the deal. I'm a big believer in if you are motivated enough to want to go through the process of getting your real estate license, it's never a bad time. Being licensed is never a bad idea, especially if it's just for your own personal deals, right? You can make money on your own personal deals. They can pay you your commission. You can use that commission towards buying a home. So that's a beautiful, wonderful thing. Is now a good time to get into the market thinking you're going to make it rain or thinking you're going to make a quick buck? No. If you are moving into thinking about getting into real estate, thinking that, you're watching everybody make money or, I'm bored with my job and I'm going to make this my full-time venture. No. But do I think it's a good time to maybe dabble in real estate, get your license, start to see what it's like to ease your way into the industry? Abso-freaking-lutely. Now's a great time. You know why? Because most of the low-hanging fruit people who got into it for the wrong reasons are bouncing as fast as possible because things are hard now. because you have to actually work for your money, because you have to actually think about things and get creative and negotiate and be available and not spend every dime that you make, because you have to be consistent and think about what's tomorrow, right? So if you're thinking about getting into real estate, I love people who say that, highly recommend it. Stay tuned. I've got some interesting announcements to come for the real estate industry. Just stay tuned. That's a little snippet. That's a little preview. Nobody has to know what's going on yet. Wink, wink. Just stay tuned. Follow and subscribe. But the bottom line is if you're thinking about getting into real estate, hell yes, now's the time to start doing it while things are kind of slow and mundane. But don't make it your full-time job right off the bat. Ease into it. Do a part-time hustle. Ease your way into it until you have enough of a base. And as the market shifts back to a really good place for everyone, to where you can count on it for your full income. I would never give somebody the advice to quit your day job and become a realtor right now, because now is not the time to do that. Would you agree, Amber?
I would agree. And I mean, I'd also say, like, there's a lot of people that got in the industry that just don't want to work, right? So, and that's what made it kind of look bad. And those people will be getting out of the industry at some point in the near future.
And they are.
But
they already are.
If you're a hustler and you're willing to put 8, 10, 12-hour days into your day, you know, and really hustle, think outside the box and stuff like that, I don't think you can go wrong with anything you do.
I agree. I'm about it. If you have a dream, go for that dream. Go for the dream. If you need advice, feel free to click the link in the description. I'm happy to give as much advice as possible. I do have some special content coming out just for my amazing realtor friends. I love my community so much. I'm so grateful to be a part of it. I used to teach free marketing classes and things like that, and I just haven't had the time in the last few years. And I'm looking at getting back to that and getting back closer to my people, because I'm a big believer that if I scratch your back, you scratch mine. And you know, when you're on the other side of a deal from someone you've had a good experience with, it's going to go easier for your clients, and it makes it all well and good. So please consider getting into real estate if it's something you're into, but do not make it your full-time gig right off the bat, right? Sam, okay, let's see. Lance Johns in Driving Las Vegas and More Baby says, hey, Amber, hey, it's Tommy Gill. Hey, Tommy Gill. How you doing? Urban Backed says, what should your score be at? If you want to buy
Depends on what type of loan you're doing. You can have a score as low as 540, believe it or not. You can do an FHA loan with that with 10% down, 580 with 3.5% down. For grant programs, most of those are a 660 FICO score. So, you know, it just depends on what type of loan program you're going to do.
Yeah, 100%. And that's the thing, is that's why it's the bottom line is there's a lot of you guys that comment on our videos all the time, and we love you. We appreciate you. We're so grateful that you tune in. Why haven't you clicked that link? Why haven't we had a conversation? Why aren't we talking to you? Why don't we know your first name? Why aren't we buddies yet? Why aren't you having a drink with me in town? Right. So the bottom line is, like, it does depend, and you're never going to know what it is for you until you call. And that's the bottom line. So you got to do your part. We're doing our part. You got to do yours. Right.
Yep.
Sammy Bowen. Hey girl. We have been overdue for drinks for like 3 months. I'm going to be at First Friday. 20th anniversary of First Friday is tonight, my friends. What? Sammy, if you're out and about, you better text me. Let's go. I owe her a drink, or 3, I think. Aaron Wilson, Aaron from Philadelphia. Love your channel, AC, Las Vegas gal. Thank you, Aaron. We love you. We appreciate you. Urban Backed says, I'm interested in a commercial property, like single building, small retail store. Is the down payment more, and is it harder to get a loan? Do you guys do commercial loans?
I don't do a lot of commercial loans. Honestly, I should get into commercial more, because I know a lot of people are more looking that direction. Yeah. I do believe the down payment is more when you're doing a commercial. I do know that part. You know, you do have to provide a little bit more as far as business and stuff like that goes to get a commercial loan. So
yeah. And we do sell commercial real estate. We actually do quite a bit of commercial real estate. So if you are seriously interested, just click the link in the description. Let us give you kind of the rundown for your specific instance. I hate to say that and make you think we're just hooking you in for a phone call, but it is very, very specific. And the commercial real estate is just a freaking weird ass game. It's weird, but we're good at it. Just click the link. We'll help you out for sure. Samuel is giving us hey, Sam Jackson, good to see you, buddy. Suggested book, The Psychology of Money by Morgan Housel.
Sam always has good suggestions. Love it.
Sam also said his plan is to stay there or sell there, pay cash for a Las Vegas home, and then refinance for improvements. Another great idea. Sam, you should also look at the home. What are those called? The home improvement loans? Talked about those.
Yeah, you can do a home improvement loan, or instead of paying cash, because if you're going to do a loan with home improvements, those are higher rates. So don't pay cash, keep a little bit of money, like do a smaller loan on it and keep some money back so that you could just put that into your house. You're going to be able to probably have a little lower payment that way.
Hey, so let's talk about it. And we know you're already working with us, Sam. So make sure you bring that up so we can make sure we know your full plan. That's the other thing, guys. When you call us, we need to know your full plan. We don't want to just know we're going to get into the house and then you figure it out later. Let us know what your rainbow plan is from pot of gold to pot of gold, because we really want to make sure that these two things match. We could definitely maybe figure out a better rate or a better loan program that might actually feed both sides of that rainbow. So, all right. Generational wealth. So this is Taroso X3 says generational wealth is built on real estate, period. Tax benefits, income, build equity. That's why it's called real. Cars, stocks, jewelry. Are those called real? No, those are liabilities, not assets. Ooh, Taroso X3. You
Thank you.
Woo!
That is awesome.
I love it. Everybody's giving me what time it is. It's 6:44 here. Well, you better have a cocktail in your hand. Hello. It's 47 a.m. and somewhere else. Gosh, we got people from all over the world watching us, which is super, super fun. Lacey, cocktails. Wait, girl, you're too cute to not have a cocktail with me. Let's go. We need a photo together. Let's figure this out. If you fear something is happening in the future, why get out of bed in the morning? Samuel, God, what a wise man. I love Sam.
I know. You always got good things to say. Thanks, Sam.
I love that. Urban Back says the rents are higher, but so will your mortgage paid will be high with high rates. How as an investor can you make money and your margin be so low? Right. Okay. I think basically the question is, if rents are higher, that's great, but also your mortgage rate's going to be higher because the rates are higher right now. What we're trying to say is how you can be smart with your money right now in this market, this slice of life that we're in the middle of right now, is that now's the time to negotiate for builders to buy your rates down, for sellers to buy your rates down and pay your closing costs. And so walking in knowing you're at a 7%, I'm just making numbers up. I don't know what the rate is today, 7%, but you could maybe get it down to closer to a 5. That gives you more room and more margin. But the bottom line is you don't have to be cash heavy and cash flow heavy from day one when it comes to an investment. The whole point of an investment is long-term investment. So buy that house, get it rented, even if it just barely covers that mortgage. Get someone in that house and get it rented, get it covered. And then when it's time to refinance, boom, refinance that bitch down. Boom, now you're making a little bit more money. Next time you can refinance, boom, refinance that bitch down. Am I right?
You're right. But I mean, the other thing that I thought about too, though, is if you're buying an investment property, you're putting a large sum of money down on the investment property, right? So you can also put that large sum of money into the stock market. You can put it into the bond market, but those are very volatile right now too. So if you look at it, you're probably going to gain a little bit more. You are getting close, but if you're looking at a long-term investment, you're going to gain more by taking the rents, because obviously rents in these type of inflationary markets are going high versus stocks and bonds are having a little bit of a hard time depending on the day, right?
Absolutely.
So,
all right. Sam said it was fun meeting your team in person. We love you, Sam. We love you. Hey, Tish, thanks for saying hi. Happy Friday to you. Slim says, what are your thoughts on bank-owned homes? Amber, I'd love to hear your thoughts on this because I've been talking a whole lot. As usual, I have a tendency to. I'm looking at one in North Las Vegas that was built in 2004 and has been on the market as a foreclosure for 111 days. Before you talk, so just so you guys know, bank owned and bank foreclosures and stuff, the time on the market is not going to help with your negotiability. The time on the market is largely due to the contract and the way things go and the process that it takes to get a home foreclosed upon, bid on, the whole thing. But Amber, what are your thoughts on bank owned homes?
I think you need to look at the same as you would a normal home because that's really truly what it is, right? I mean, back when everything happened, like after the meltdown, everything was bank owned that people were buying at that point. So a bank owned home, I would look at it and see what kind of deal you can get on it. And then I would, then I would do the inspections on it, see what's wrong with the house and stuff like that. I would look at it just like it was a normal house. It doesn't really make a difference if a bank owns a house or a regular seller owns a house or an investor owns the house. You're going to buy it and you just want to make sure that house is livable for you.
The only thing I would say with bank-owned homes too is sometimes it's less negotiability because you're working with a bank with no emotion and no desire to get out of it. They're just waiting for the buyer to move forward. So when you have a seller on the other end, you have a little bit more pliability when it comes to negotiating and getting you more. Slim, I hope you're working with Steve because I know that's your agent on our team to make sure that he's helping you with that bank-owned home. But really, to Amber's point, just look at it like a normal home and we'll negotiate the shit out of it and squeeze that lemon for you. All right. Chris says, it was the Rise Festival. Oh, Chris, I guess we're going to have to wait till next year then. Bummer.
But good memory, Lacey.
I know. Ben says, can you do a dual license with 2 states? Yes, sir, you can. You can do a dual license with multiple. And actually, thank you, Ben, for bringing this up. I want to talk to you about something that we don't mention often, but I think we're going to start working it into our normal script. Amber Coleman is licensed in how many states now, my friend?
Well, my team is licensed in more, but I'm licensed in Nevada, Utah, Idaho, funny enough, Oklahoma.
Oklahoma.
Yeah. But my team is licensed in California, Arizona, and we're working on other states too.
So the reason I bring that up is we had a client who bought a house with us, who used you, Amber, as the lender and us as the buyer's agent, and who has decided to list their home. And they are listing the home to move out of state, whatever. They're moving to Idaho. And they have reached out to me and said, we only trust Amber and we only trust you. And we want to sell our home with you. And, you know, we're so grateful when we learned that Amber was actually licensed in the state that we're moving to. We now know that she will be able to represent us on both sides and that we're going to be taken care of. And it just reminded me that, gosh, we don't talk about that enough, how I'm not currently licensed in other states. I am working on that, though. Our team is definitely working on that. I do, however, have a vast group of agents that I work very closely with, who I vet personally, to make sure that they give you the same service and expectation that we would provide, hopefully, you know, to the best of our ability. But Miss Sweet Amber is I'm going to follow your lead, basically. Any state you're licensed in, I'm going to go get licensed in.
Okay, I'll give you the list.
Yeah. But I just want you to know, if you're looking to sell your home in another state, if you don't have a realtor, call us first. Let us help you connect with somebody that we trust so that they can help you on that side and we'll help you on this side, and then we'll marry it together. If you are working with a lender on either side of the fence, make sure that Amber's not already licensed there, because if one lender's working on both loans, I can guarantee you it's going to go much smoother. And she also just happens to be the most wizardly awesome amazingness when it comes
She's always making my head grow bigger. Can you guys see it like on the screen right now?
But honestly, I met with clients this week. We walked through their house. We said, okay, we're ready to list. We're going to put it on the market. They're aware of the market conditions. They're, you know, ready to play this ball game. And it really touched my heart to hear them say, we only trust you guys. And we're so grateful that we found out that she was licensed where we're moving to. So congratulations.
That's so awesome.
And I want to let you guys know, if you're looking at any state in the continental United States, let us know before you move forward. And we would love to make sure that you're covered by someone we trust or someone on our team, for sure. All right. And then the last one I'm going to say, my friends, is Belinda asked a great question. Good to know with credit. Would I still qualify if I was lower than 540?
So lower than 540, we would have to figure out how to get you higher. And that's what the game plan is for. That's why we pull it. We see what's keeping your credit down and then kind of give you a game plan, like go after this, go after that. A lot of times the real old stuff that might be on the credit, a lot of times I'll say, just leave that alone. If it's expensive, I'll just say, leave that alone. And we'll try to start with the lower stuff and work our way up, and then give you a game plan so you don't have to, deal with that in the future.
Yep. And honestly, Belinda, like, I'm going to tell you, like, you may think you're 540, but we use different credit systems than what you might be looking at on Credit Karma or whatever that might be. So reach out. There is no shame in that game. We have all had low credit and crappy credit and bankruptcies and foreclosures and all the crappy stuff. There's no judgment whatsoever. And we're always about, like, who gives a shit? Let's just move forward and get you an answer. So click the link. Let us talk to you. You may not be as low as you think, number one. And number two, Amber is the queen bee of fixing that credit, girl. You may think, oh, I've already tried it. Oh, I've a blah, blah. You're going to try it with Amber in your corner. I promise you that. So you get the right people in your corner, and we'll make sure you get treated the right way. Amber, can you believe this? But we've been talking for more than an hour.
I know. And you know what? It's getting close to 5, Lacey.
I know. I need to find a bottle of wine or something. It is First Friday. It is the 20th anniversary of First Friday here in Las Vegas. So I'm going to be enjoying a small client event. We're doing these small bite-sized client events with like 5 to 7 people at a time. Because man, those big ones were, woo! Not only were they like really big and expensive, but I didn't get to connect with as many people. So we're doing a very small event tonight. Don't worry if you haven't been invited, my client friends. I promise you're probably on the list for the next ones. And then we're going to go down to First Friday and check out 20th anniversary of First Friday. So stay tuned, because I might go live from First Friday. I might do it.
Oh, I'm excited to see it.
Last time I went live at First Friday, I did 11-minute live, and the system I was using did not let me turn my camera around. So the whole time everybody was looking at me. I was like, this isn't fun. Like, this is me. This isn't First Friday. And then beyond that, it was 900 degrees out, and I didn't have anybody walking with me. And I got bamboozled and kind of knocked over by a bunch of people that were excited to meet me. So awesome that you guys want to meet me, but I'm live and I'm trying to keep things going, and it was really scary. So if I go live tonight, I'm going to have a bodyguard with me, and I'm going to make sure that the camera actually works before I go live. So anyway, stay tuned. Amber, thank you as always for bringing your amazing knowledge to the forefront. I love you. I'm so grateful.
Thank you for having me.
Amber has been in my corner since, we're going on 6 years, right?
I know. Crazy, huh? You're not getting rid of me. We're stuck forever. We're stuck at the hip right now. She's like my sister. Can you tell? We're starting to look alike a little bit, right?
A little bit. I just got to grow that hair out. I'm starting to cry. It just hit me when I said 6 years out loud, like, wow. 6 freaking years? What the hell happened?
Don't do it.
I'm going to cry. Okay. Anyway. Okay. In almost 6 years, this woman has not only taught me this business, put her arm around me and pulled me through the mud so many times. I'm so grateful for your knowledge. But you've got how many years in this business? I know you don't want to age yourself.
You're going to make me cry. Don't do it, Lacey.
Let's do it. How many years?
20 years. Woo! 20 years in this business.
And you don't look a day over 22, my friend. Not even a day, not one day. 20 something years over in the business. I'm almost 6 years in the business, and I'm every day so freaking grateful. I don't care about the ups and downs. I don't care about what the news says. I don't care about what people talk about my city, because I'll cut their eyeballs out when I get a chance to. Trust me.
There you go.
I don't care. I love this city. I love that the city still radiates enough energy to still call those of you who are watching this content in and make you think about and consider making this your possible home. This is truly my neon hometown. I've got neon best friends, and life can be what you want it to be in this beautiful city. You just gotta make it happen. You gotta find the right people to put next to you. And I'm super grateful for you, Amber, because had you not been by my side 6 years ago, I don't know that I would still be in this business. And I think that many buyers that we've worked with would say the same thing. I don't think that they would have been brave enough to take that step without you. So thank you.
Oh, no, thank you. I think we have an equal exchange of good energy. We help each other out. You've helped me get through a lot of it too, but we're not going to get emotional right now, okay? Because you have to go first Friday.
I did good holding that back. I'm not good at that, but I did. I can't effing believe it's been almost 6 years. That just really hit me. Okay, enough of that.
Time flies when you're having fun.
Yeah. Thank you for joining us. Happy Friday. I hope you have a cocktail in your hand. I hope you're living your best Las Vegas life, no matter where you're living right now, and that you're going to be making your way to our beautiful neon hometown soon, and sooner rather than later. We want to help you. If you're thinking about buying a home in Las Vegas, Amber and I are here. We're ready. Let's put a game plan together. Don't sign off. Don't think this is over. Don't think you're all the stuff. We know the stuff. We know you don't know. So call us. Let us tell you what's up. Have a wonderful, wonderful Friday. We love you. We appreciate you. And we will see you in Vegas soon, I hope. Don't forget to sign up for our webinar. If anything, it gives you a chance to look at these gorgeous faces again. Hello. And I'm going to go enjoy several cocktails at First Friday. So come and find me.
Have fun. Bye, guys. Thanks for joining us.
Bye-bye.
Bye.